Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the world of Bitcoin, taking a look at what's been going on most recently with the price action, what I think is likely to happen next and all that wonderful stuff. Now as I get into today's video, if you do find it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so you will be kept up to date with everything that we do here at Cheeky Crypto. If you haven't yet joined us in Discord, what are you waiting for? Check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free and I don't think you'll be disappointed by what you find down there, so why not go ahead and check it out. Let's go ahead and jump right down into today's video, starting things off with the 1 hour time frame. So here we have Bitcoin paired up with USDT on the BitGet spot exchange. So following on from yesterday's video, we are still expecting a move to the downside. We had this idea between 25,545 and 25,665. We did also talk about potential short and the idea that maybe we moved up a little bit higher. We actually came up into the high range here. We were talking about the 26,165 to 26,249, and you can see that we hit that higher peak right here. So as I said, there was a potential better entry for a short position, and that would have been just up there. Okay, we'll talk more about that later. From this move, we saw an immediate rejection and straight back to the downside, and it still looks like we've got a ways to go to the downside. A quick liquidity grab here before moving on down. Our target is still very much valid. We are, of course, still looking for our move to the downside. Our B wave is in fact now up here, meaning that we are likely to see this next step to the downside. Now, with this being said, we need to adjust just because of this move higher here. Okay, we need to adjust our target range ever so slightly. So what we're going to do is we're going to go and just measure that out. We're going to grab hold of the wick low here to the wick high up here. And then we're just going to move this over to our high, and we can see that our target's just ever so slightly adjusted here. It's actually now, let me just go ahead and remove the fibs. It's basically just in this little range, 25,611 to 25,732. Okay, so that's going to be the range to complete the C wave pattern right in here. Okay, I am looking at this as a diagonal structure, taking us down towards the 23,287 to 24,113. So ultimately, everything's still looking like it's on track for this move to the downside. This is a giant wave 3, which we'll talk about on a daily time frame in a moment. So everything is kind of going along quite nicely. Nothing terribly too unusual. A little bit of volatility to be expected, along with liquidity grabbing and all that kind of stuff. Next kind of move, my expectation is a small move upwards before we continue our move down. We're over bull on the 8 and 4 hour time frames, but yet we're just almost oversold on the 1 hour time frame. So expect a small bounce and then a continuation to the downside for us to kind of finish off these moves, but it's taking a fair amount of time to see these ones through. Let's take this up into the daily time frame. As I said, this is a wave 3 move. So as we kind of pull down into that low range between 24,000, this is actually going to complete a wave 3 structure. It's at this point that we would expect to see a bigger bounce before going down into the 5th wave at 22,659 to 23,426. So you can see there's a definite kind of idea here that we are looking for a bigger trend-based structured move to the downside. Now, at the moment, it's yet to be seen as to whether or not this is going to be, broken. The structure is actually going to get invalidated and we're going to rally on up. In order for that to happen, we need to see a price higher than 28,588. That's this white line that's just up here. If we need to basically see a rallying up higher than this in order to break our structure, if we cannot do that, then unfortunately, yeah, we are likely to complete the 5-wave move. And if we do complete 5 waves to the downside, then, well, that's going to mean that we're going to have a 3-wave bounce, followed by an additional 5-wave drop to the downside to complete our minimum expectations, which would be a 535. And as you can kind of see scaling this out, it would be a giant 3-wave pattern like this. Okay, we have got these fair value gaps. These are the last 3 outside of the one that we've just created on the daily time frame, and the fair value gaps have a tendency to want to get filled out. Okay, we are still technically in a bullish structure from a smart money concepts point of view, but if we were to complete this 5-wave move to the downside, we'd break these existing lows. I think that's going to change our characterization into a bearish structure. Ultimately, the fair value gap on the low side here is 19,107 to 19,008. 95. And again, that would actually coincide quite nicely with a CME gap as well. So on the daily time frame, as you can kind of see, our expectations here are that things are not going to be as bullish as maybe a lot of people want them to be. And at the moment, we know the targets that have to occur if we want to break this structure, 28,588. And unless that happens, unfortunately, yeah, we're going to see more slippage to the downside. Take this to the weekly time frame, and you can still see that we're resting on the weekly 200 EMA just here. It's the white line, and the 50 EMA is our resistance. So from a weekly standpoint, there's a lot to kind of fight for here. If we get a closed position on the weekly time frame below the 200 EMA, then unfortunately we're probably going to be bearish for quite a significant period, as price will probably slip down a lot further. It's not really my expectation to get a closed position down there just yet. I suspect that we'll probably, on the weekly time frame, get this wick down into those fifth wave positionings, bounce up more towards the to the 50 EMA, and then from there break down and probably close below the 200 EMA after that. So I expect this is going to take some time to play out, probably several weeks into couple of months or so, and yeah, we'll see how it kind of develops. But for now, it's not looking overly that strong on the weekly time frame. But for the most part, I think we're not going to have that clean cut bearish situation straight off the cuff. I think we're going to have to see some volatility, some liquidity grabbing, lots of liquidations, and a bit of a frustrating market, I think, for the most part. So from the weekly standpoint, we'll keep an eye on it. If we do get any good indications as to kind of what is to come, then obviously we're going to communicate that here on the channel. But for now, it is what it is. Let's go ahead and move this over into the world of our on-chain data. So membership.𝗕𝗘𝗪𝗏𝒑𝒀𝒀𝒀𝒀𝒀𝒀𝒀𝒀😏 is our membership website. On this membership website, we hold so much for members, right? Member-only video content. We've got project reviews, airdrops, news. We've got events, upcoming events that are going on in the space. We've got AMAs twice weekly down in the Discord server, private Discord chats, trading ideas, technical analysis on request, and so much more, right? I can't really name it all off the top of my head. There's a 7-day free trial across all the plans. So it's kind of like a risk-free test, take it for a test ride and see what you think, right? 7 days free trial. If you do not like what you find here, which I'd be shocked at, but maybe it's maybe not for everyone, you can go to your profile area by signing in and go into your subscriptions and cancelling. If you do not cancel it, you will be charged. Just bear that in mind. But a 7-day free trial, what have you got to lose? Try not give it a go. In here, what we're going to do is we're going to go over to the data zone. We're going to go to the Bitcoin on-chain data, and they're going to load it up like this. And so we have the overview of Bitcoin here from the on-chain data perspective. $69,000 all-time high, 656 days since the all-time high, 62% down from its all-time high. The hash rate at 394,836. What else have got going on here? We've got 326,000 active addresses, 326,000 transactions in the last 24 hours. That's what I meant to say. $433,000, 873,000 active addresses, 48.8 million total accounts. Actually, let's focus on that for a second, right? As a lot of people look at the growth of the amount of wallets as a key metric for success within these parameters of cryptocurrencies, right? And well, 48.8 million accounts for Bitcoin, right? But if we come over to the wallets, how many of those wallets actually have over 0.001 Bitcoin, right? On this low end of the spectrum, 23.5 million, right? So 23.5 million have over 0.001 Bitcoin, which basically is dust in itself anyway, right? It's a really insignificant amount of Bitcoin, which tells us that there is over 20 million wallets or 25 million wallets that have less than this. And so therefore, taking a look at the wallet counts actually tells us that there's a lot of empty wallets out there not really doing anything. And we can probably argue that even at 0.01, where it's 12.2 million, is actually also kind of a dust level. I would say that probably this is where you'd want to start considering a wallet to have some kind of meaning. So, basically 0.01. So, a pretty interesting kind of level. That would put us at what, about $600 maybe No, it's not even going to be that, is it? It's going to be more like $200 worth of Bitcoin. So at this level, you might kind of think, okay, that's kind of meaningful. $20 of Bitcoin versus $200 of Bitcoin and so forth. So it's an interesting one. So when we start thinking about the overview being 48.8 million accounts, actually, there's not as many that actually have meaningful amounts of Bitcoin in them. It's an interesting one to kind of note anyway. But we have 10 different wallet sizes in total that we monitor here at Cheeky Crypto. We've got the top 5 wallets. These are basically your retail sized wallets from 0.001 all the way up to 10 Bitcoin per wallet. And then we've got 5 wallets underneath, which is more your institutional level, which is 100 Bitcoin all the way up to 1 million Bitcoin. No one has 1 million Bitcoin. We just get the flat line through the middle there. Okay. So what's actually going on in here? Well, if we take a look at the whales are basically 1,000 Bitcoin or more. There's 2,021 of these. They're actually slightly up in the last 7 days at 0.55%. So 0.5% in the last 7 days. Or more specifically, if we take a look at the number of wallets, they're actually up 11 wallets in the last 7 days. So 11 wallets now, new wallets are existing with over 1,000 BTC. So it's an interesting kind of thing to look at. 30 days ago, 2,015 wallets, so 0.3% up. But outside of that, really, I mean, over the last year, they're down 6.17%. So we know that they haven't really been backing Bitcoin's price action for a long period of time, but they've started to maybe state a little bit of a move to the upside, which is quite interesting. Now, when we take a look at 10,000 BTC or more, you can see that these are also up ever so slightly in the last 7 days. It's actually up 1 wallet, so 0.93%. In the last 365 days, up 14.74%. So we're starting to see a bit of an upturn here as prices pull to the downside ever so slightly, an uptick when it comes to the most recent movements of wallets. Now, this particular wallet of 10,000 BTC or more is actually quite a significant wallet. This one is kind of a middle ground sitting between the likes of MicroStrategy at 100,000 BTC and a standard whale at 1,000 Bitcoin. These guys seem to fluctuate a lot, but they don't tend to operate in the standard way. They tend to accumulate during the bear market. You should think, well, yeah, why wouldn't they? And then they kind of flood the market with excess Bitcoin towards the end of the bear market to bring in a new low. This is what happened back in 2018. They accumulated during this entire bear market and then flooded the market with a lot of Bitcoin. We don't know the rationale and the reasoning behind why, but we can see that that particular action brought the price action of Bitcoin down to its low in December of 2018. But we have something very similar. We've been seeing these wallets accumulate during the bear market, and then as the turn of the year occurred, they started to pull back down. Now, it's not a straight drop as we had seen previously, but it has been a very significant drop as well. So again, we can speculate to think about whether they are just going to continue to accumulate or whether this is the beginning of a downturn with this particular wallet as they've been grabbing liquidity. Nothing moves in straight lines, so you can see a little bit of an increase here, but we suspect that probably they'll be further to the downside on this wallet. When it comes to 100,000 BTC or more, we can see that there's 4 wallets. They've been 4 wallets pretty much for a very long time. A year ago, though, there were 5, so we're down 20%. So yeah, it's one of those, like, you know, it is what it is, and we'll see how that kind of progresses. Again, these wallets here, they don't really have any rhythm and rhyme to them from the data point of view, as I could see. Essentially, they just seem to be accumulating or coming out of their position at seems to be random times. I guess there's a little bit of liquidity grabbing from time to time, but for the most part, yeah, I think they're just slowly building those positions into these big mammoth wallets, and so progression is clear between our 10,000 up towards our 100,000. So keeping an eye on it, but I'm not too concerned about the fluctuations at this level. I'm more concerned about the retail layer, because at retail levels such as 1 Bitcoin or more, where we see that there's 1 million wallets that have 1 Bitcoin or more Bitcoin in the one, essentially is indicating that that's actually a significant amount of the BTC supply sat at what I would class as an emotional layer, because this is somewhere where they are overreacting to price movements. And if we just saw a 30% shakeout of retail investors, that's 300,000 Bitcoin, which arguably is basically 75% of all of your 100,000 BTC wallets, right? So we have to consider that actually the retail participants are the ones that I'm more concerned about over the larger 100,000 BTC wallets, because it doesn't take much of an overreaction to see a 30% reduction in these wallets, taking us down to 700,000 wallets would basically mean 300,000 Bitcoin just entering into the market, which would drag Bitcoin's price down quite significantly. But again, that's only at this layer. We'd also see something very similar from the 0.1 Bitcoin, which again, if we saw a 30% reduction in, we'd see a significant amount of Bitcoin also entering in. I think we'd see a lot of Bitcoin basically just come in and drag price of Bitcoin down. So I do think that there's a lot of concern around the retail investors that are currently holding Bitcoin. That makes me quite nervous, because they're not the ones that are going to be acting logically. They're the ones that are going to be acting emotionally, in my opinion. Let's go ahead and take a look at some on-chain data for our exchanges, starting things off with liquidations. So $9.4 million of liquidations in the last 24 hours. OKX was the exchange with the most amount of liquidations, and that will come in at 4.05 million. 48.99% of long positions were liquidated, and 51.01% of positions were short that got liquidated. Essentially, it's a very 50-50 mix, as you can kind of see. This is because price bumped up and bumped down very, very quickly, liquidating both directions, and we are pretty much exactly where we were this time yesterday when we were recording the video. So you can see that basically liquidity was being grabbed and people were being shaken out of the space, or squeezed out of the space. OKX represents 42.68% of liquidations, Binance 30.48%, Huobi 12.17%, Bybit 10.07%. So anything unusual there? Not really. Everything's pretty much standard at this point. Nothing too much to be concerned with. Liquidations are okay, as in they're at a medium level. They're not in a aggressively high level or anything like that, and they're not on the low side. They're kind of just medium, just average kind of levels of liquidations for very boring movements in the Bitcoin space. And when it comes to exchanges, though, I think it's a really good strategy to make sure that we have ourselves exposed to as many different exchanges as possible. As you guys know, BitGet is my go-to platform at the moment. I use BitGet for 100% of my leverage trades and 90 to 95% of my spot trades. If you haven't yet signed up to BitGet, what are you waiting for? Check it out. The affiliate link is in the description below. If you do use that link, you are eligible for up to $8,000 of rewards, depending on how much you deposit and trade on the platform. Ultimately, I think it will become your go-to platform like it has become mine. And there's many other benefits that come with BitGet, but why not go ahead and test it out? And I think it's a good strategy ultimately to have exposure to as many of these exchanges as you possibly can, because you just do not know which ones are going to be live, active, whilst you need to kind of log on and sell your cryptocurrencies. Do yourself a solid favor and get yourself registered on as many as possible. As I said, BitGet is my go-to platform at the moment, but not the only one that I am registered on. I'm on Binance, Coinbase, KuCoin, Gate.io, MEXC, Crypto.com, you name it, I'm pretty much on it. And this is because I think it's a great strategy to make sure that I have exposure to as many as possible, familiar with how they work, depositing crypto, depositing fiat, withdrawing fiat, withdrawing crypto. Do I need to do KYC? Do I need to link bank accounts up? And get very familiar with how each platform works. This means that I'm not going to be kind of panicking when things are all up in the green and we're trying to sell. There's a good strategy behind this one. So in a bear market, why not give yourself a favor? Get yourself set up to all of these exchanges. All the links can be found in the description down below and in our Discord server. That brings us over and into our trade section for today's video, and that's going to be talking about this trade on the 1 hour time frame. Okay, so I missed this one again. So we saw this move to the upside at 1 o'clock yesterday. And yeah, this should have been where we should have got that entry. Now, do I think we're likely to retest these highs? It's possible, but for the most part, probably not. At this point, I would probably say it's not worth trading. I would be waiting for a more clear path forward. So if we come down to our target range here at 25,611 to 25,732, I would be looking for a potential long at this point with a nice tight stop loss, and just look for getting some decent profit here with a high leverage base. But we'll see how that kind of plays out. That would be my approach here. I'd be waiting for a bounce on this one rather than just waiting for or trying to short the market here. I think that's going to be slightly higher risk because we missed this high peak here. It's going to be a little bit more difficult to kind of get in on. Of course, we do have the 200 EMA, which if we were to kind of come up and test, then that would be where I would be looking to short the market. I'd put the stop loss above the swing high at that that point and bring down our take profit into this range here to get us above the 1.5 risk reward ratio. That would be good. So only if we come up to the 200 EMA would that be worthwhile. Otherwise, I think waiting for a better picture, a better path forward would be the better play here. So waiting to see how price kind of continues over the next few hours. If we test a 200 EMA short, if we come down to our target range, then we go long. I think that's probably the way I would approach the market. But bearing in mind, I'm not a financial advisor. I cannot give you financial advice. All I can do is give you my thoughts and opinions on the data in the charts as I personally see it. And if you do have access to a financial advisor, you should probably consult them. Ultimately, I'm just a guy on YouTube. So, do what you do best, and I'll do what I do best. At the end of the day, I think I'm going to wrap that video up right there. If you have found it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe. And until the next one, guys, have a fantastic day.